Hi, this is Jack from Alpha Charts 365 with a State of the Market update. Today is January 19th, 2020. Before we get started, this is not a recommendation to buy, sell, or hold any stock or security. This is for informational purposes only. I may hold positions in some of the stocks mentioned, and also know your time frame and your risk tolerance for anything that is mentioned. Just a disclaimer also that my time frame is usually weeks to months, so I am not a short-term trader at all. Okay, so let's get into the charts. We're going to start with the S&P, and as you can see, it just relentlessly is moving to the upside. I mean, volume is still pretty good on the upside. And so everyone is talking about how extended it is. And it is extended from the 150-day EMA, roughly 8.2% right now. Okay, so that is extended, but can it continue higher? Absolutely. Eventually, though, we are going to get some type of sideways movement for consolidation, or maybe even a check back to one of the short to medium term moving averages, all in the context of a longer uptrend. So for me, I have some nice gains in some of my positions. So if it does chop around or come back a little bit, that's within my risk tolerance, and that's to be expected from time to time. So this is absolutely fine. If it wants to keep going for another week or two higher, it could do that too. No big deal. But eventually, it's going to come back and retest some of these areas, depending on how much of a pullback and what the situation is. All right, so that's the SPX. QQQ looks almost exactly the same. We have all-time highs coming down, roughly 11.2% extended. Not that big of a deal. I'm gonna switch this to a weekly chart real fast, and I wanted to see something. Back in 2000, let's see how far it was extended back then. I haven't even looked at this yet. So back in 2000, it was, oh man, it didn't do it. All right, never mind. I'll check that out, and maybe I'll post a update to that later. All right, but that's the Qs. Extended also. Moving on to IWM. IWM is a little bit different. It had actually a little bit of a pullback on Friday. All right, so it is still in an uptrend. Everything is doing just fine. But yeah, so maybe that's the start of maybe a little consolidation, maybe a check back to this little moving average. But again, the 23, the 65, the 150, all moving higher. The pullback was on slightly lower volume than the day before. That's kind of nice to see. So a low volume pullback, pullback on decreasing volume right here would be very bullish, right? It's now building its energy to move higher, wearing out the sellers. Next up, Dow Jones Composite. Just taking straight off, almost straight up right here. Pretty amazing. Volume is really good. Again, this won't last forever. You will get the check back, the retest, whatever you want to call it. But as you can see, it is all-time highs. We have the breakout, and it's just a beautiful looking uptrend that is taking place right now. Moving on to the financials. So the financials are at this really interesting place. I'm going to go to the weekly chart so we can see this better. I know I've shown this before, but you have this big base, hit it, and to me, this is a very bullish. When it hits it and quickly comes back and hits it again, because it's a weekly chart, this is quick compared to from here to here, right? So could it pull back a little bit and hit it one more time? Maybe, but a breakout right here would be, super, super bullish. And I believe it may have closed at all-time highs. If not at all-time highs, very, very close to it. So just very, very close to all-time highs, right? That was all-time high right there. So huge, right? Huge spot for financials. As far as volume goes, nice accumulation day here, nice accumulation day here. So So far this year, it looks like financials are the way to go. My opinion is IYG. If you're going to be in financials, they have already broken out past their big level. You can see very similar looking way, right? Hit here, hit here. So yeah, so financials, this one actually came back and then came back again, and now broke out to all-time highs. So if you're going to be in a financial sector, I think IYG, the financial services, this is the big boys, right? JP Morgan, Citi, Wells Fargo, American Express, Goldman Sachs. That's who makes up this this subsector. To me, that's where it makes sense to be positioned. Semiconductors, again, looking at health of the market, continues with a beautiful uptrend. Had some shakeouts, and semiconductors will do that, right? So you see it's uptrend, shook out, uptrend, came back, uptrend, shook out, uptrend, shook out, uptrend, shook out, uptrend, but relentlessly up, stair-stepping up, right? These shakeouts and a big up, shake out, big up, and so yeah, so maybe it shakes out one more time. Let's see how far it is. So we are 29% away from the that's a weekly chart. Hold on, let's go to the daily chart. Yeah, there you go. That's better. Let's measure that. 13% away, 13.2% away from the 150-day EMA. So it's it's extended, but it's not overly extended. And again, you can see those uptrend, shakeout, uptrend, shakeout, little shakeout right there. And so we would expect another shakeout to come at some point. But again, trend is higher, and we would expect this to keep going higher. And also, listen, semiconductors, like you've heard before, are in everything we do in all parts of our world. From our cars, our computers, our smartphones, our thermostats, our microwaves, whatever. They're everywhere. And it's just going to be increasing, not decreasing, right? So the demand for semiconductors should continue higher. And we're seeing it in this uptrend, and they are leading the market. All right, let's take a look at lumber. Lumber is at a very important spot, and you know what? It's just consolidating sideways. That's okay, right? Big run up, pulled back a little bit, consolidation sideways, right at an important level. That's kind of bullish. A breakout here would be very, very bullish. Put call ratio. Change that to a line chart. And as you can see, we keep getting over, I don't want to say extreme-ish, but to me this is kind of in the more extreme area. It's not like extreme here back in November 2017 or back in July 2015. But again, we're clumping up in this extreme area. We could clump up in this extreme area. Now, if I see a deep thrust like this, that would be something that would catch my attention. So, because we could stay in this extreme area for a fairly long period of time, as you can see from here, from here. That's not a terrible thing. Again, a thrust higher, though, would catch my attention, right, beyond where the averages have been. So right now, it's yes, we're extended. Yes, a pullback is going to be due at some point, whether it's Monday, tomorrow, or whether it's 2, 3, 4 weeks from now, or a month from now, or whatever. No one knows. But just something to watch. I like to look also at SPX TLT. Again, just for a measure of risk appetite, and people are preferring stocks and equities over safe haven of government bonds, it seems like, and the uptrend continues. So I could put that in the bullish camp. The VIX is, again, still in a bullish range, not too much volatility going on there. So everything looks good with the VIX. The S&P versus the rest of the world is breaking out, right? So this uptrend has been in place since 2010 and continues higher, and now we are breaking out once again. So I know China's looking really good, a lot of opportunity in China, but when you look at the world in aggregate, the U.S. is still beating the rest of the world out. Again, you may find a pocket here and there. Again, China right now looks, has a lot of nice looking stocks, but again, U.S. is the place to be compared to the whole entire world minus the U.S. And I also like to look at the value line geometric index. Again, we broke out. I was expecting a pullback. Again, we got some sideways consolidation, and now the breakout. So that's a pretty strong looking chart right there. The median stock is doing well, which means the market is doing well, and breadth is good. So the next I want to look at some leading sectors, right? So we all know that the XLK, or the technology sector, by far is leading the market, and has been leading the market and is doing extremely well. Over a year now, it's been leading the market higher. So looking at the XLK, what are the top holdings? So I pulled up the State Street holdings list, and as you can see, it's 20% Apple, almost 20% Microsoft, right? 5% Visa, MasterCard, Intel, Cisco, Adobe, Salesforce, Nvidia, PayPal. So if XOK is leading, again, these charts, we all know Apple is doing amazing. Microsoft, amazing. Visa is just breaking out now. When I say just breaking out, that was actually a few weeks ago. I am long Visa, by the way. Yeah, but I bought this breakout right here, and I mean, literally straight up has been doing amazing, right? So these are leading sectors. Intel, and a lot of the semiconductors are doing very well. Intel, not as much, but it did kind of break out of, this area. And so, yeah, it's meandering higher. So not leading it higher, but it's participating. Cisco, I'll do one more. Cisco's a downtrend. As you can see, I haven't looked at these, so cherry pick out the good and the bad, right? We're just going down the list, because this is how I do it. Adobe, straight up. Again, so I think I made my point. XLK, leading the market. If you want to be in winners, why not be in the XLK, right? And these holdings, PayPal, 2%, right? Let's look at PayPal real fast, because I know that was on my radar and on my watch list. Yeah, look at PayPal. And it's making the right side of a base. So this uptrend is just now starting again. And here's a nice little place that you could potentially manage risk against if we break out above, 120-ish, we'll say. So that's an interesting one. The other place that I'm finding some strength is going to be XLC. So XLC is the communications index, and you can see it went sideways for a long period of time, and now it's breaking out. So let's look at those holdings. And look, Facebook, 20%. Google combined, 22%, right? 23%. Netflix, Comcast, Charter Communications, Activision Blizzard, AT&T, Disney, Verizon. So this is one that is now starting to make the turn, in my opinion. Again, led by the two big boys, right? Facebook, that was a big level, and it's gone straight up. Again, may pull back just a little bit, may give an opportunity for a buy. And of course, Google, right? They make up, 45% or something. Google has been straight up from this double bottom breakout here. Looks really good. Again, it's extended, not a place I personally would buy, but they are leading the XLC higher with 43, 44%, whatever it is, between the two of them. But you may want to look at some of these and see if they're going to start participating also. So basically, the market is going up. It may be extended as it has been the last couple weeks. Doesn't mean it's going to go down tomorrow. But again, expect shakeouts and pullbacks along the way. But the trend is higher, and I think that if we don't participate, then we're doing our accounts a disservice. Good luck this week, everybody trading, and I hope you all have a great week. Thanks.